The potential for Ethereum to reach insane price highs to make you rich after the merge is very real. And no, it's not going to happen overnight. But what is happening is laying the groundwork for Ethereum ecosystem domination to continue and for the price of Ethereum to moon super hard in time. In this video, I want to lay out the factors which will lead to Ethereum going as high as, well, maybe even like $20,000, maybe even more in the future. My name's Lark. I make videos on investing. If you do enjoy that topic, you like staying up to date with what's happening in the crypto space and beyond, then please do subscribe to the channel. And of course, hit that thumbs up button if you do believe that Ethereum can and will reach $20,000 one day. It's the hopium thumbs up button. So let's get into this. I want to lay out the bull case for Ethereum after the merge. So, to be clear from the start, none of this is going to happen right away. In fact, we could even see the merge being a big old fat buy the rumor, sell the news kind of event. But the merge to proof of stake is going to bring in a whole new level of certainty for Ethereum investors. You see, there's a whole certain crowd of money that's looking at Ethereum right now and saying, well, what if the merge doesn't work? What if something breaks? It's too risky. I'm not going to put my money in that until I see it working. That money is on the sidelines. Not all money, of course. We saw 1 million Ethereum being pulled off of centralized exchanges just last month. So the market is paying attention without a doubt. But in order to court even more investor dollars, well, the merge is going to be a big step in the right direction for providing that certainty to investors. Now, the merge also brings in new economics for Ethereum, which is a pretty damn big deal. You see, right now, daily emissions are big. And when the merge comes in, they're going to be reduced by 90%. How big are they? Well, 13,000 new Ethereum a day right now are being mined and largely dumped by miners. Some of them are saving it for proof of stake, of course, but the reduction of 90% brings it down to 1,300 a day rewarded to stakers. Now, many of those stakers may not sell because they can just restake that Ethereum and earn more Ethereum on top of that. But even if they do sell, well, that's just a fraction of the sell pressure, like a $20 million a day reduction in sell pressure, which $20 million a day may not sound like a lot for such a big asset, but that's $600 million a month. That's $7.2 billion a year less Ethereum being dumped on the market at current prices. And the demand for Ethereum is rising all the time. So what happens to an asset's price when the supply drops and the demand either stays the same or rises, as we are seeing now for Ethereum? The price goes up, man. Then, of course, we can add on to the conversation EIP 1559, something we've talked about a lot here on the channel, but it's super important to mention in any conversation about price juice moon mechanics for Ethereum, because we're going to see EIP 1559 burning like 1 million Ethereum a year post-merge. In fact, if the last year had been post-merge era, we would have seen 1.9 million Ethereum burnt, which is insane. That makes Ethereum really deflationary. In fact, it would have been 1.9% deflationary last year, making Ethereum scarcer and making the price, once again, ready for that moon mission. Now, before I explain why Ethereum can go to $20,000, let me just tell you about Wealth Mastery. This is my weekly cryptocurrency investor report. We talk about NFTs, DeFi, altcoins, airdrops, lots of no BS information. Our members love our value-packed issues, and I'm sure that you will too. So use the link down below in the description to get signed up for free, I may add. So let's go ahead and delve into the case for silly price targets for Ethereum. You see, here's the thing. This year's Ethereum Merge is as big of an event as the Bitcoin halving. Hold on. Bitcoiners, don't let your heads explode yet. Here's my reasoning. You see, Bitcoin's market dominance, it's around 40% at the moment. Well, Ethereum, just the Ethereum assets, 18%. But when we count for all the other tokens that live on Ethereum, the NFTs, the hundreds of billions in stablecoins, all that stuff, we actually come much closer to parity in terms of market dominance for the Ethereum ecosystem, meaning that the merge will positively affect around 40% of the cryptocurrency market. But Lark, how high can Ethereum go? Well, I'm glad that you asked. How about $20,000? Price is right, man. It's a good number. Nice, big, silly, round number. Why not? Well, look, here's my reasoning on that. And look, this is not going to happen next week or next month or even next year. It's going to take years. Maybe by the end of this decade, we see a $20,000 Ethereum. Remember, buying Ethereum, you're buying exposure to DeFi, gaming, metaverse, layer 2s, stablecoins, DAOs, whatever, all that stuff. If you're bullish on anything happening in the Ethereum ecosystem, you can just buy and hold and stake your Ethereum. The more successful all of those things are, the more successful Ethereum will be, and the more demand for it there will be, and the higher the price will go. So why the $20,000 target? Well, that would actually be parity with Apple's current market cap. And I still maintain that long-term seeing Ethereum rise up to an equal market cap to Apple is possible. Or well, at least where Apple is now, around $2.4 trillion. It was higher recently, but still. Which may sound like just a random measuring stick that I'm choosing, and to an extent, we are comparing apples to Ethereums here, or apples to oranges, however you want to put it, but I think we can see Ethereum do that or go beyond it. And I make the Apple comparison because I really believe that Ethereum is like the Apple of cryptocurrencies. They're similar in their potential for disruptive technology. And when the final version of Ethereum is live, it's going to be incredibly robust technology. 100,000 transactions per second on the main chain. It's going to be crazy. It's going to be a force to be reckoned with. So look, a $20,000 price tag, it's only a 12.5x in price from here, which is pretty good, right? That's not bad. But what if Bitcoin does a 25x to reach market parity with gold one of these days, which I believe that it can? Then maybe I am truly not being bullish enough. And I know it's kind of a crime to be bullish now in a bear market, but I'm thinking long term here. But how does all this make you rich? Well, you buy Ethereum, you hold Ethereum, you sell it when the price moves. That's one way. To my mind, though, ETH remains one of the safest investments in an otherwise super volatile and risky space. So maybe you can just stake your Ethereum, hold it for long term. Well, let's say you buy 10 Ethereum, for example, at the current prices, and that's no small purchase, is what, 16,000, 17,000 bucks or something? But let's just use that as an example. So if you are staking those coins and getting, say, 5% APY from staking, then at $20,000 per coin, a number, again, that I believe Ethereum can and will reach one of these days, then you're earning $10,000 a year from staking. That's insane. That's a lot of money. That's a lot of money, man. Oh, sure, maybe it's not buy a yacht and quit your job kind of money, but still pretty good money. Anybody out there, I'm sure, would appreciate an extra $10,000 a year. Anyway, these are the reasons why Ethereum is the number 2 coin in my portfolio. It's the reason why I continue to hold Ethereum. It's the reason why I stake Ethereum and will continue to do so for years to come. But what do you think? Do you agree with, well, anything I've said here? Or has old Lark been hitting on that hopium bong a bit too hard recently? Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.